right, folks. This is something I've been meaning to get to for a minute. And since I am not just now not seeing it, but since I'm just now getting to it because I've been doing other things, it's been a busy couple of weeks. But let's get back into this because this is actually very important. This story kind of reminds me of what went on back in like 2006, 2007, when I first started looking into this. And this is actually similar to the LIBOR, what was going on with the LIBOR prior to the meltdown of the banking system in 2007, 2008. So let's get into it. Chinese banks no longer trust one another as the repo rates skyrocket. This is from Zero Hedge, of course. For those who have grown bored with the ongoing U.S.-China trade war, whose escalation was obvious to all but the dumbest BTFD algos, the biggest news of the past week is that yet another Chinese bank was bailed out by the Chinese government. The third in the past 3 months. At least they're orderly, okay? Which is unlike the U.S. government. And a substantial one at that. One with over $1.4 trillion, $200 billion. The Hang Seng Bank's nationalization was certainly large enough to make a dent in the Chinese financial system. And on the Chinese Sovereign Wealth Fund, which drew the short straw, was told to bail out the troubled Chinese bank. We'll actually get into that. Here I actually have the story, but I'm not going to read it here. Hang Seng's bailout followed those of Baoshang and the Bank of Jinzhou, which means that three of the top four most troubled banks now have been either nationalized by the SOE or seized by the government, which is effectively the same thing. That's true. Here are the banks and their annual reports of how much money they have. You can see the Baoshan Bank is right there. The Bank of Shilin is right there. The Bank of Hangzhou. Oh, this is data there. It's 2017. This is the banks in order of size. Of course, to regular readers, this development is hardly surprising, especially after I posted in mid-July, we saw the $40 trillion Chinese banking system. I think they did that. Approach its closest encounter to the proverbial Lehman moment. See, when the 4-day repo rate on China's bonds, in essence, the cost for investors to pledge their Chinese government bond holdings for short-term funding on the Shanghai Exchange briefly spiked to 1,000% in afternoon trading. Wow. While some attributed the surge to a fat finger, far more ominous signs were already present in the aftermath of the Baoshang failure, which has sent Chinese banking stocks tumbling. 1-day and 7-day weighted average borrowing rates had remained low thanks to huge central bank cash infusion. In other words, ZERP, or quantitative easing, such as 200 billion yuan we described back in May. Longer tenors, such as the 1-month repo rate, have marched sharply higher. On 5%, yeah. Oh, good Lord. Look at this. This is ridiculous. In other words, you have to pay a whole lot of money in interest just to get a 1-month repo rate. Yeah, they don't trust each other. And now, none other than Goldman points out that something is clearly breaking inside China's banking system as one after another, one small bank dominoes falls. As the following Baoshan Bank takeover in late May, interbank lenders, that's the LIBOR, or the SHIBOR as we talk, interbank lenders have become more cautious toward the credit risk of smaller, weaker financial institutions. In other words, they got some bad paper on their books that they're not talking about. The result, a Chinese banking system in which banks have lost trust in one another, manifested itself in much tighter liquidity in the interbank market, with the highest intraday 7-day repo rate staying above 8% over the past month, as questions swirl about the viability of the underlying collateral. In fact, as the chart shown in the chart below, the creeping funding freeze amongst Chinese banks is now even worse compared to the historic episode in the summer of 2013, when following an aggressive ramp-up Beijing's deleveraging campaign, repo rates exploded to the point effectively stopped interacting with each other. That's what happened. That's really what happened with your financial meltdown. See that spike? See that spike right there? Yeah. That means your repo rate percentage. In other words, they charge an exorbitant amount of money for a 7-day repo rate because of bank failures. As Goldman observed, the sustained spikes in intraday repo rates suggest that some banks are still under pressure and having to pay higher costs to obtain funding in the interbank market. A number of actions has been taken to ease concerns regarding credit risk. In other words, basically the Bank of China is going to have to pump in liquidity and basically back these banks so that business can be done, including the recent equity injection into the Bank of Jinzhou by the ICBC Financial Asset Investment Company and China Center Asset Management. Nonetheless, as the bank concludes, it will take more time before market conditions will normalize. Meanwhile, if more banks from the list above, or worse, larger banks end up failing, and so far there is every indication that the process is only getting worse, the Chinese funding freeze could get so large that the most dreaded event finally take place, a bank run on one of China's largest state-owned banks, which is a reminder are also the largest in the world. As a reminder, are also the largest in the world. One final, if key point, it's not just Chinese banks that are in funding peril. Look at that. Chinese corporations are on the firing line, and Goldman points out in the same report the pace of China onshore bond defaults is showing no signs of slowing down. According to the bank's estimates, there were 5 new defaults in July, bringing the total number of new defaults this year to 23, compared to with 38 defaults that occurred in 2018. These 23 issuers had a renminbi amount of 9.5 billion of onshore bonds outstanding at the time of default, equating to 0.5% of all onshore corporate bonds outstanding at the start of 2019. However, all the defaults so far this year are from privately owned enterprises. Those without state backing. This probably has a lot to do with trade war that's going on right now. They can't sell anything. They can't sell anything as much as they would like to. RMB 9.5 billion onshore bonds outstanding at the time of default equates to 3.5% of all POE bonds outstanding, private-owned enterprise bonds outstanding at the start of this year. To us, this elevated level of defaults can continue to impact weaker credit, as the net issuance of bonds rated AA or lower turn negatively. Ick. Okay, these are defaults. Look at that, man. Well, you can see this is you can see this is Trump when he started basically started trade war in 2018. Look at this. These are all the defaults. And the system's probably going to, the system is slowly but surely freezing up. Okay, this is a, you can probably go to Zero Hedge and look at this. This is the default list since 2014. Defaulted bonds, corporate bonds. But anyway, that's the end of the story. But if I can find it, we'll go. If I can find it in my notes, hopefully I still have it. This was talked about with the LIBOR scandal back in 2006, 2007. The same thing started to happen, that the banks didn't trust each other, and they started freezing up, and that stopped the white paper loans, that loans that actually go out that do business, because all the short-term money. All this short-term money actually is the liquidity that's needed to actually facilitate trade and businesses between companies and also manufacturers, sending 90-day loans or bridge loans to buyers and producers elsewhere. So basically, when the banks start freezing up, then trade starts freezing up, and then trade starts freezing up, then the economy starts to crash, because movement of money, movement of goods, movement of trade is necessary in this complex global economy that we're in. So it's not just us, because you see what happened to Deutsche Bank just a few months ago, and HSBC in the UK basically fired like 4,000 people. So and there's rumblings about people being let go here in the United States because they're actually preparing. So China could be the canary in the coal mine. In fact, I was listening to a brother that's on RTD, Rethinking the Dollar, and he was suggesting that behind the scenes, a lot of your larger banks are already filing or actually making plans in case they have to either default or pull back or restructure. It's already in the works. And now I think I'll actually link that video in the description if you guys want to go look at that. But this is just a heads up. And probably this is a good distraction from all the manosphere bullshit that's actually going on around. This is probably a decent distraction. Might be dark news, but at least it'll take your mind off of other stuff. So this is just a heads up. There's probably a few more things coming. I get this stuff every day, from my email think tank. Shout out to them, to Mr. Garcia and Mr. Thomas and Mr. Prince. You guys are doing yeoman's job. Plus, this story was actually suggested to me by Alvin. So shout out to Alvin. Alvin Hollinger. Shout out to him. So keep your heads up. Keep your head on the swivel. Watch your money. If you can, invest in some metal as a defense. If you're into the cryptos, invest, but invest carefully. Moving your money around will help if there's spots where you can actually hold money and send money as a defense. But the thing is, if it's a worldwide crash, it's not going to really do you that much good, because everybody's going to be in the same boat. And the money that they have, the money that you have, will be null and void. So there's that. But now, the only thing you can do is do the best you can. If you got a lot of money, you need to move it around. Investigate ways to do so. If you can, do so by assets. I mean, physical assets like land and seeds and stuff like that in places that are a little bit more remote from urban centers. Try to develop skills that are crash proof. There's not probably a few of them, but in this interconnected world, it's getting harder and harder to find. But like I say, 2019, get right or get left is what it is. So, with that, it's about the 15-minute mark. I'm going to jump off here. This BGS out, and I will see you cretins on the next one. Peace.